All right, family. Today is September 21st, Thursday. We are here for day 2 of our free basic smart money week. All right. These are today's topics that we are going over for today's call. We're going to be dipping and dabbing into the different ways that people look at charts, people analyze charts, fundamental analysis versus technical analysis. Okay, understanding the difference between the two and the importance of the two. Okay, the different types of charts that people look at. You know what I mean? Talking about line charts, candlestick charts, bar charts. You know what I mean? Talking about time frames. Talking about the analogy of a candlestick. You know what I mean? And just breaking down different ways that people look at charts, support and resistance, trend lines, things of that nature. You feel what I'm saying? Risk management, right? Understanding the importance of risk management and why risk management is key. Understanding why trading is not at all gambling, but once, like I was saying, all on yesterday's call, everything is 100% calculated. Okay, there is a method to making money in this market. All right, excuse me. Psychology, all right? Understanding why mindset is way more important than damn near everything that we done went over on this boot camp so far. Psychology is the most important thing that we're going to talk about on this boot camp, believe it or not. You feel what I'm saying? You think that looking at a chart is the hard part. Like I was saying on yesterday's call, this is the easiest part of trading, is what I'm going to pretty much be talking about for the first half of today's call. The easiest part of trading is analyzing the chart, figuring out where that's going to go. You know what I mean? But from there, once you actually get that knowledge and you're ready to start making money, the fact that you have access to a 6.6 trillion dollar market can fuck with your head. You know what I mean? And they'll bring out flaws in you that you did not know that you had. So we're going to talk about why psychology is so important. And then at the end of the call, we're going to get everybody set up with I'm going to get everybody set up with a broker to start trading with a demo account. Okay, so I'm going to put y'all on NVFX and get everybody set up with that. And walk y'all through how to set up a demo account. Y'all can either do that on the call with me or on your own time after we get off the call. But I do have the directions on how to do everything on this PowerPoint from start to finish, so you'll know how to create the demo account, how to translate that account to your MetaTrader 5, how to log in, and going through some different things that are on MetaTrader 5. And then tomorrow we'll actually start like dipping and dabbing into actually trading. You feel what I'm saying? Being on MetaTrader 5, popping trades together. You know what I mean? Saying, introducing y'all how signals work, things of that nature. You feel what I'm saying? And really start breaking down how to make some money. You know what I mean? But today's whole call is to start introducing y'all to charts, and getting y'all introduced to MetaTrader. Okay, that's why I told everybody to download that yesterday. You know what I'm saying? Drop a one in the chat if you downloaded MetaTrader 5. Cody, for sure, for sure, for sure. Okay, so that's the reason why I wanted y'all to go ahead and download that. Just start fucking with it. You feel what I'm saying? I didn't want y'all to do too much, but just go through it. You know what I mean? See what was going on. Look at how charts look at. You feel what I'm saying? And then of course, at the end of today's call, I'm gonna quickly go through MetaTrader 5, show y'all how to pop a trade and whatnot. And I want y'all to play with it tonight. And then tomorrow, you feel what I'm saying? Like I said, we're gonna start actually looking at how to trade and whatnot. But let's go ahead and get today started, man. Without further ado, I'm gonna go ahead and show it up, man. Let's do it. All right, here we are. Day 2 analysis of strategies. Once again, we're going over fundamental analysis, technical analysis, different types of charts, risk management, psychology, and an introduction to trading platforms, TradingView, and MetaTrader 5. Okay. All right. So different types of analysis, right? Different types of ways that people look at charts and try to make money off charts. Okay. There are two different main ways that you would analyze a chart to develop trade ideas. Okay. Technical and fundamental analysis. Okay. People love to debate about which analysis is best and most consistent, but it's whatever makes the most sense to you. And as you start to master one type of analysis, you would like to add the other one to your trading arsenal to become unstoppable. Okay. Understand that technical and fundamental analysis does go hand to hand. If you ask me what type of trader I am 100% a technical analysis person. As I was saying on yesterday's call, I don't really pay too much attention to news, politics, things of that nature. I could really care less. All my money comes strictly from technical analysis and understanding what days specific news events happen. You feel what I'm saying? So I'm going to show y'all all that. I'll be able to break down technical analysis 100%. That's easy. When it comes to fundamental analysis, I'm going to introduce y'all to different things that fundamental traders look at. However, I don't look at that, so it's not like I can sit here and teach you that. You know what I'm saying? Like I teach you technical analysis all day, but I will send you in the right direction if you're the type that wants to go off of fundamental analysis. I'll break it down for you, then show you where you can access different information to learn more about fundamental analysis, because that's not my strong suit. I'm not going to sit here and try to put y'all on game with something that I do not use as often. Okay. Once again, I'm a technical trader. That's just me being honest with y'all. You know what I mean? Let's go ahead and keep it pushing. Technical analysis. All right. Technical analysis relies on price charts. You know what I mean? That's why all y'all see on my story, all y'all see me post 24/7. All you see a trader post or talk about is charts. All right, price charts. Candlestick charts are the most popular because they provide the best visual representation of price movements. Okay. So the green and red candlesticks that you may see a trader post, you know what I mean? Little rectangles up and down, those are candlesticks. Okay. These types of traders study historical price movements and use that to determine current and future price moves. Okay. We all believe that, you feel what I'm saying? Or not all technical traders believe that, but the majority believe that if it happened in the past, it will happen again. You know what I mean? So if you can look at a chart and figure out what price did in specific areas in the past, you can start to get an idea of what could potentially happen in the future. This is what technical analysis goes off of, and these traders are known as technical traders. Okay. Technical traders believe that all the information that you need to predict price action is reflected in price. All right. They believe that price action is the best indication of future price movements. Okay. So if you ask me what's the best indicator, what do I use to make money? It's price action. Okay. Nothing more, nothing less. With price action, I always preach for my VIP students or for anybody that follows me or been paying attention to me, anybody that's been on my calls, traded with me before, you understand. You feel what I'm saying? That I always say that price will never do anything without letting you know first. That is a technical trader's, you know what I mean? That is his motto. That price will never do anything without letting you know first. Okay. Everything that price will do will be reflected in price. Okay. You can pay attention to different trends and patterns in the market, which can lead to trading opportunities. Okay. Although this type of analysis can be very self-fulfilling, it's also very subjective depending on who's viewing the market. All right. What does that mean? First of all, understanding that technical analysis is very self-fulfilling. Why? First of all, like we were saying earlier, understand that you're in the 3% of the world that is trying to take advantage of the foreign exchange market. Out of the 3%, somebody drop in the chat real quick how many of that 3% actually succeeds when it comes to trading. The 3% that trades in the foreign exchange market, what percentage of that 3 succeeds? 1. Okay. So understanding that you're in that statistic and you're marking up price, or you predict that price may go in a certain direction and then it actually goes there. You know how self-fulfilling that is? You know how good that makes you feel? You know how good it makes me feel all the time, every single day, to mark up a chart. You know what I mean? Use my technical analysis, predict where price is going to go, and then it actually goes there. You know what I mean? That is very, very self-fulfilling. It's robots that can't even do this shit. You feel what I'm saying? The best people in the world, the smartest motherfuckers in the world can't even do this shit. So it is very, very self-fulfilling to predict where price is going to go, and it goes there, especially when you're doing it consistently. You feel what I'm saying? It makes you feel like you him or her. You feel what I'm saying? But it's very subjective depending on who's viewing the market. Why? Because there are thousands of different ways to look at price. You feel what I'm saying? There's thousands of different ways to analyze a chart when it comes to technical analysis. You feel what I'm saying? No matter if you're looking at support and resistance, trend lines, any type of indicators, then we look at different strategies like harmonics and Wyckoff, things of that nature. There's so many different ways that people view a chart and try to make money off of it. So depending on who's viewing that chart, I can put 10 retail traders inside of a room and I can all put them look at the same chart and I can ask them all, hey, what is this chart going to do? And I'll get 10 different answers. You feel what I'm saying? So it's subjective depending on how you trade. Now, I ain't gonna lie, the way that I teach my students and the way that we trade smart money, that ain't subjective at all. I can put 10 smart money trades in the room. Everybody gonna tell me where price is gonna go. But that's advanced. That's advanced Forex Bootcamp. I'm gonna run that for another day. You know what I mean? But understand that when it comes to technical analysis, there's a lot of different ways that you can view the market, and that can be subjective depending on who's viewing that market. Okay? The name of the game with technical analysis is usually history tends to repeat itself. That's the main name of the game when it comes to technical analysis. That's what most technical traders believe. If it happened in the past, it'll happen again to a certain extent. Okay, so we're gonna look at different ways that technical traders look. let's take a look at how different technical analysis works. Okay. Excuse me. All right. Technical now, price charts. Okay. First things first. Like I said in the first slide, everything that a technical analysis person does is based off of a price chart. Okay. And there are three different charts that traders use to analyze price. Okay. Line charts, candlestick charts, and bar charts. Okay. As stated in the previous slide, candlestick charts are the most popular because of the visual representation that it gives you with price. Okay. I'm about to go to trading view in a second. I'm gonna go to the next slide, and then I'm gonna be going back and forth from this to trading view to show you what I'm talking about. You know what I mean? Wait till the next slide. Okay. First things first, line charts. Okay. So this is probably the least when it comes to like traders like us, retail traders, probably the least popular chart that people pay attention to, but it's the most simplest one that you can pay attention to, right? Line charts are the simplest type of charts to analyze and connect closing prices over a specific period of time. Okay. Line charts are most often used for long-term analysis to identify overall trends and major turning points. Okay. So real quick, we're going to go to trading view and take a look at what a line chart looks like. Okay. Line charts, you know what I mean? Once again, they're the least popular when it comes to traders like us, long-term investors, banks, hedge funds. They may pay attention to these line charts, you know what I mean? But they give us the least amount of detail. And when it comes to us as retail traders, we have to have the most detail possible to determine where price is going to go to next. So this is a candlestick chart. I'm gonna break that down in a second, okay? But we're gonna look at a line chart, okay? This is what a line chart looks like. Okay. So as you can see, this line chart is literally simply to be able to determine highs and lows. You feel what I'm saying? Be able to determine or look at support areas in the market and resistance areas in the market, which is something I'm going to go over in the next couple slides. Okay. If you don't know what support and resistance is. Okay. But this is simply to be able to determine highs and lows in the market, or in other words, key areas in the market, pivot points in the market that price may turn around at. You feel what I'm saying? So, like I was just saying in the first slide, what I was saying about technical analysis people is that they believe that if something happened in the past, it will happen in the future. Okay. So, if you're looking at an area like this right here, you can see how many times price came down to this same area. Let me highlight this for y'all real quick. You see how many times price came down to this same area? One, two, three times. Okay. Remember, the whole game of trading is to predict where price is going to go and make a profit off of it. So if a technical trader sees this and they see that, okay, price came down to this area and bought off of it before, it came down here and bought off of it again. You stretch this out a little bit and you see that price came down to the same area over here too. You feel what I'm saying? Then technical traders believe that if it happened once, it'll happen again, and you can cop a buy down here and you can see how far price goes in your direction. If you buy down here, the higher the price goes in your direction, the more money that you make. So imagine you popping a buy all the way down here and watching price come all the way up here. That's a lot of money that you just made. You know what I mean? This is an idea of what technical traders believe in. Okay. And this is what a line chart pretty much specializes in, being able to show highs and lows or key areas in the market where price may turn around at. Once again, this is good for our long-term investors. You feel what I'm saying? Hedge funds, people that like to trade off of the higher time frames, which is something that we're going to go over in a little bit as well. Okay. But once again, line charts are simply, once again, the simplest chart that you can look at, and is here to determine highs and lows and pivot points in the market. But they do not offer as much detail as the other two charts that we're about to go over. Okay. This is a line chart. Very boring. You know what I mean? Very, very boring. Okay. Back to the point. Bar charts. Okay. Now, bar charts give you a little bit more information than line charts. Okay. It's in the middle between line charts and candlestick charts. Bar charts sit right in the middle when it comes to how much information that it shows you. Okay. Each bar represents a specific time period and shows the open, high, low, and close prices. Okay. It's something I'm going to go over on the next slide when it comes to candlesticks. I'm going to go over open, high, low, close. So don't let that confuse you. Okay. With bar charts, we can analyze the volatility of the market by assessing the range of the bars. Okay. The longer the bar, the higher the volatility that is in that candlestick. Bar charts can also be used to identify chart patterns like double tops, signifying potential reversals in the market. Okay. Let's go take a pic. Let's go take a look. Isn't a visual of what a bar chart looks like down here? Okay, but we're going to go to trading view and take a look at the difference. Okay, so everybody like just kind of pay attention to the structure. You know what I mean? Like just pay attention to like this high being created here, right, and all these highs here, and pay attention to this pivot here. We're just going to like break it down to a bar chart. Just look at the difference in the information that it shows you. Okay, here, and we're going to go to bars. Okay. And now we have a little bit more information. What's the first thing that I can identify that's different from a line chart? If I come right back to a line chart and I zoom into like this area right here. Okay. And then I'm gonna zoom into this area right here as well. Okay. So I'm gonna come right here and I'm gonna look at a line chart real quick. Boom. Okay. Who can tell me the difference? Does anybody see a difference in how price delivered right here between this line chart, the information that it shows you on this line chart, and then when you come to a bar chart? Okay, does anybody identify the difference right here? Bar chart, line chart, line chart, bar chart. Does anybody see the difference? Pay attention to this white line right here. Line chart, bar chart. What's the difference and what price is trying to tell you right here? Right through the line. Exactly. You know what I mean? That's all we need to see. It's going to make a little bit more sense in the next couple slides, I promise you. But just understand that that is a big difference in the information that it tells you. Okay. The line chart only specifically shows you the close in each and every candlestick. It doesn't show you how much volatility comes behind each and every candlestick. Okay. So although this high was created in the exact same area that it was on the bar chart, there's no difference in, excuse me, there's no difference in how price delivered over here. It's the exact same move, it's the exact same price move. But the difference between how it is showed on a line chart and a bar chart is a line chart simply just shows the close of each price, while bar chart shows the volatility in between it. Okay, so let me go to this next couple. Let me go to these next couple slides, and I promise you this will make a lot more sense, family. I promise you. Okay. But yeah, as you can see, these look a lot more different. You can see the open, high, low, and close of every single candle. And that's what's important in a bar chart. And that's what's going to be important in a candlestick chart. And that is the biggest difference between a line chart and bar and candlesticks. Okay. Let's go over this real quick so I don't want anybody to sit here and be confused. Okay. First, we're going to talk about the candlestick bar real quick. The open, high, low, close right here. Okay. Boom. So candlestick charts, okay, that's the one that y'all always see me talk about. You always see me post. This is the one that I trade off of, and the majority of traders, right? Everybody on this call is going to be looking at candlestick charts. Okay, everybody that is a retail trader looks at a candlestick chart. I really don't want to see nobody looking at a bar chart or a line chart. It doesn't make any sense, to be honest. I mean, it makes sense. You know what I'm saying? It shows you, but if you're trading, if you're a day trader, you need to be on candlestick charts. It gives you the most detailed information on what is happening inside of the candlestick. Okay, so the most popular and most detailed chart, candlestick charts display the same open, high, low, close that bar charts do, but in a different and distinctive way. Okay. Candlesticks can be used to identify Japanese candlestick patterns such as dojis, engulfings, and hammer patterns. Okay. These patterns help traders identify potential trade setups for reversals or continuations in the market. All right. Candlestick charts often also reflect market psychology. For example, a candle with a long wick on both sides with a small body represents indecision in the market. Okay. They are particularly popular to us short-term traders because they give us a detailed view of price action over a smaller time frame. Okay. So once again, candlesticks are the best option for you as far as being able to analyze a chart and make money off of. You'll never see any of us, any trader for real, looking at a bar chart or a line chart, unless you're talking about a bank or some shit like that, and nobody pays attention to banks. Okay, let's talk about this open, high, low, close, and why this is so important. Okay, so yeah, everybody should be used to seeing the green candle versus the red candle. Okay, so if you did not know, if the candle is green, that means that within that period of time, the candle was bullish. The candle went up. The value of whatever we're talking about went up in this period of time. We're going to go over time frames in the next couple of slides as well. But imagine that this right here represents a day's worth of time. Each candlestick that we're looking at right here represents a day's worth of time. We're looking at the first bullish candle right here. I want you to pay attention to the bottom down here where we're talking about the open. Okay. We're talking about a daily candlestick, right? That means that every day when the market opens, pop quiz, who can tell me what times the market opens every single day? What time does the new day start in the market? Pop quiz. Not 5. Give me one more hour though. That's what time the market closes. 6. I mean, the market closes at 5 every day, opens at 6, gang. You know what I'm saying? So you got 5, closes at 5, opens at 6. So every day at 6 o'clock, you will get a brand new daily candlestick. Okay. If this candle opens lower, okay, so you can see how we got the open down here. Open means that this is where price was when the day started, when this candle opened. Okay, if we're talking about a daily candlestick, that means at 6 o'clock, price was down here. This is the open. Okay. The low of a candlestick is always usually a wick. Okay. And that represents how low price went or how low the value of whatever we're talking about went within this day. Okay. So remember, price open here. Say we're talking about 6 o'clock. At 6 o'clock, price is here. This is the open. Okay. The low represents how low price went within this day. Okay. So say, for example, price open here, and then it may have flashed down a little bit, and then we come up. You feel what I'm saying? And this all happened within a day's worth of time. This is the lowest that candlestick went within a day. Okay. And we come up here and we're talking about the close. Okay. So a price open right here. Okay. At 6 o'clock, we're talking about a daily candlestick. Then what time did it close again? Talk to me real quick. What time did it close? Let me mute your mic.
5.
5. All right. So if the candle opened at 6, it closes at 5. We're talking about daily candlesticks. Okay. 5 o'clock, this is where candle closed at. So price open right here at 6. At 5, that's the close. Okay. And remember that the open and close is always represented by the body of the candlestick. Okay. This is what's called a body, the big rectangle. Okay. The little lines that are on the top of the candlestick represent the high and the low of that candlestick, or the high and the low of what happened within this day's worth of time. Okay. So once again, we have the open, okay, which is where price opened at within the specific time frame. Okay. The low, which is how low price may have went in within this specific time frame. The close, which is where price had closed at within a specific time frame, and the high, how high price may have went within a specific time frame. So to give y'all kind of like a visual on this, and let's break down bearish real quick as well. Same thing, just vice versa. You feel what I'm saying? So if you ever see a red candlestick, that means that price was bearish. That means that the value of the price went down during this specific time frame. So if we're continuing off the example that we're talking about, daily time frames, right? The open price open right here at 6 o'clock. Okay. The high represents how high price may have went within the specific time frame. The low represents how low price that went within the specific time frame, and the close is where price closed at the end of this candle. Talking about daily, that's 5 o'clock. This is 6 o'clock. So now so we're talking about like a 1 hour candlestick, and every single candlestick represents 1 hour worth of time, right? Then this is where price may have opened at, say, at like 1 o'clock. You know what I'm saying? This is where price ended up closing at by 2 o'clock. And with this high and low, is how high or low price may have went or danced within the hour. Okay. And you know that price is bullish or bearish based on the color of the candlestick. Okay. The color of the candlestick determines which way price went within that specific time. Okay. So in order to show y'all this, right? Let's go to TradingView. And what I want to do is I want to kind of like just look at TradingView, because the market is open right now. I'm not sure if there's going to be a lot of volatility behind it, but I want to look at a candlestick chart with y'all, right? And I just want to kind of like pay attention to 1 minute's worth of price action. Okay. And I want y'all to pay attention to how a candlestick opens, how a candlestick closes, and everything that happens within. Okay. We're going to talk about time frames and break this down a little bit more in the next couple of slides. But for right now, we're going to pay attention to a 1 minute time frame. 1 minute time frame simply means every single candlestick that we're looking at right now, every single rectangle that we see represents 1 minute worth of time. Okay. See this little timer right here? You know what I'm saying? This is showing you how much time is left in the candle. And what I want y'all to do is we're going to sit here for a couple of minutes, okay? And we're just going to sit here and pay attention to what happens within the candlestick so that y'all can see open, high, low, close in real time, and that picture can make more sense, okay? So here and look at this real quick, okay? So do y'all see what just happened? Okay, let me delete this indicator real quick. See what just happened. Okay, so this candle just opened up 30 seconds ago. What happened? It opened up here, okay? It opened up right here. We watched it. And then what happened? It flashed down here, okay? So here's your open because price opened right here within that minute, and it flashed down there real quick. And now where's price? Up here. You know what I mean? So if price closes above where it just opened at, which is down here, this will stay green and this will become a bullish candle. Now, what is this wick right here? This little line that's at the top. Y'all just seen how high price just was, and that's where price just closed at. Okay, you see where price just closed at. You see how there's no body on it. Remember how I just said in the slideshow or in the PowerPoint that if you have a candlestick that has a lot of wick or a lot of lines on it with no body, that represents indecision. Okay, because as you can see, price literally closed in the exact same area where it opened at. Now look at this next candle. Okay, it just opened here, right? And you can see it had flashed down real quick. All right, so it gave a quick little flash down, and now price is right here. Okay, so as of right now, this is a bullish candle. Let's see, right? Just came down a little bit, so this becomes a wick because this is how high price just was. All right, let's see here. Price is still going bullish. All right, we're still buying. All right. Let's see, we got 7 seconds left on this candle. Came down just a little bit. Candle just closed, and y'all see how that open, high, low close makes sense now. We just watched that candle open here. We watched it flash down here. We watched the high of it go here, and we watched it close right here. Let's watch a couple more candlesticks before we keep it pushing. All right, let's watch a couple more. Let's go to a different pair that should be moving because who can tell me what session it is? This is 8:39. Who could tell me what session it is right now? We went over this yesterday. What session is it right now? London, Asian, or New York? Asian. Gang. What does that mean? What is Asian session known for? What did we go over yesterday? What is Asian session known for?
Lower volatility.
Lower volatility. Okay. So in a like in London session or New York session, you'll see this bitch moving. You know what I'm saying? Wouldn't be none of this indecision candle shit right here. But we're in Asian session, which is known to slow down. You do what I'm saying? But let's look at this last candlestick right here. It's about to okay, let's look at this last candlestick right here. It's about to form before we go to one more, before we go back to the candlestick. I mean from PowerPoint, my apologies. Okay. More candlestick. I just want everybody to make sure we're on the same page when it comes to open, high, low, close. We're going to break down the candlestick as it opens. Okay. This candle opens up in 45 seconds. So for all my brand new people, just pay attention to price. This next candle opens up. We're going to break it down one more time. Just watch this though. See how price was just up here, right? Now we're all the way down here. This is all happening within a minute worth of time. You know what I mean? So if this candle closes down here, we just watched it open right here. If it closes all the way down here, candle will stay red. This is bearish. All right. See what's going on. Good sales. I wonder why. For my people that already trade, you know what's going on right here. Pierce to that high, wick, breakup structure bearish, FVG fill. She should bust. All right, for my last minute, let's look at this candle right here. Okay. We just watched where it opened at right here. See where price is at right now, and price just created the high, right? See how hot this is the highest that this candle wick within this minute. Okay, that's why this is the high. So we already have our open, we already have our high in the candlestick. Okay, price is right here right now. Here. All right, so she just created a low. 30 more seconds on the candlestick. All right. Trying to figure out how crazy she's gonna go. Now see what just happened, right? We just went from bearish to bullish real quick on that candlestick. Why? Because price opened here. And you watched it flash all the way down here. So she was bearish for a second, but we're about to close bullish, right? So now you see the low. We got the open and we have the low, right, of this candlestick. This is how low price went within this minute. We just watched that happen. And we just watched it close all the way up here. Okay. So drop a 1 in the chat if open, high, low, close makes sense, especially for my brand new traders. If this candlestick analogy makes sense, you know what I mean? Understanding how a candlestick works, you feel what I'm saying? And of course, it's going to make a little bit more sense as we go on. But if that's starting to make sense for you, you feel what I'm saying? Just drop a 1 in the chat. Let me know we're on the same page. Especially my brand new people, especially. And if there's anything that you're confused on, please, you feel what I'm saying? By all means. For sure, for sure, for sure, for sure. Okay. Let's go back to this PowerPoint. Once again, we're gonna you'll see a lot more of this candlestick work. Okay. But going back to why I was saying that line chart versus bar chart and candlesticks are important, because now that y'all understand the high and the low of every single candlestick, right? Now that y'all understand that, let's go back to what we were just looking at, zoomed out. What we was at? What we was looking at? Who was looking at euros? Let's look at this real quick. 4 hour, all right. And let's look at these highs and lows that we was looking at real GJ. I can't remember what chart we was on, but give me 1 second. I just want to show y'all something real quick. Okay? I just want to show y'all. Let's look at this line chart. All right, look at this right here. Okay. Does everybody see these highs right here? This is what's viewed as resistance. Okay. We're going to break this down a little bit more in the next couple of slides. But for right now, understanding this right here is viewed as resistance. Okay. Remember that line charts only show the close of every single candlestick. That's the biggest difference between a line chart and bar and candlestick charts. Okay. That line charts only show the close. Remember what the wicks are in every single candlestick. Okay. Remember that wicks represent rejection. Okay. Remember that. You feel what I'm saying? For all my brand new people, we just watch what wicks are, the high and the low of every single candlestick. So now you understand that wicks represent rejection. Price went up to a certain area, rejected it, and came right back down or came right back up. Okay. So now if we understand that, you can see, look at these candlesticks right here. Okay. We just broke down open, high, low, close, right? So if we look at this bullish candlestick right here, we understand open, high, low, close. Price open right here, right? I'm sorry. She opened right here. She closed right here, right? Because it's a bullish candlestick. And remember, body is where she opens and closes at. Wicks represent the high and low or where she rejected from. So price open here, close here. But what's important is that this wick or price came all the way above, right, these highs, and then snapped all the way back down here and closed here. So if you understand that, then you sit here and take a look at the line chart, it doesn't give you that information. You feel what I'm saying? But that information is very, very, very important, especially if you trade the way that we trade. You know what I mean? That is very important. Does everybody see the main difference between a line chart and even a bar chart? You feel what I'm saying? Bar charts, they show you at least they show you the high, low, close, right? They show you the wicks, they show you the rejection. If you understand the difference between line charts and candlestick charts and the importance of it, drop a 2 in the chat real quick before we go back to that PowerPoint. If you understand the difference, for all my brand new people. That is very, very, very important information, understanding the highs and the lows of what happens. Okay. Line charts do not show a high and lows. It only shows closes. Okay. That makes sense, family? Sure. All right. So like I said, we'll see a lot more of this. Go ahead and get back to that PowerPoint. All right. So we understand candlesticks, open, high, low, close. I'm glad everybody understands this because that's very, very, very important. Candlestick analogy. Okay. Back to that PowerPoint. Boom. Okay. Now let's talk about time frames. Okay, we done went over all the charts, the different charts that people pay attention to. Let's talk about these time frames now. Y'all just watched me look at 2 different time frames. Y'all watch me look at the 1 minute to sit here and look at price action within the 1 minute time frame, and then y'all watch me look at the 4 hour to look at those highs, right, and just show you the line chart versus a bar chart. Okay, but let's take a look at the difference and the importance between all the different time frames. Okay. So price action can be viewed in different time frames, such as minutes, hours, days, and or weeks and even months, even years. You feel what I'm saying? I don't look at the yearly chart at all. The highest I look at is the monthly. And the most often that I look at is the daily. My favorite time frame is the daily. Okay. I trade off of the 1 hour and below, but my favorite time frame to analyze price would be the daily. I will show you why in a little bit. Okay. Shorter time frames are used for day trading, all right, from the 1 minute all the way down to the 4 hour. And higher time frames are used for more long-term analysis. Okay, not necessarily trading, but understanding trend, understanding where price should go. Okay, it is important to align your choice of time frame with your trading style, goals, and risk management. Okay, understanding the characteristics of each time frame will help you make more informed trading decisions. Okay, when it comes to time frames, there are 4 different types of diverse trading styles. Okay, so um before I even go into this, for my traders that are on this call, you know what I'm saying? I know I got a lot of people that are already traders. Drop what type of trader you are. Are you a scalper? Are you a day trader? Are you a swing trader? Are you a position trader? Drop what type of trader you are in the chat room. All my traders are on here. If any traders are on here that would like. I see the scalpers in the building. Like to get in and out. I see the scalpers in the building for sure. Like to get in and out. You know what I mean? Take y'all money, have multiple opportunities to get in and out the market. Understood. Okay. Me personally, I am a day trader. I love day trading. All right. Let's break down everything. All right. Scalpers. Okay. So scalpers is probably the most popular trading style that there is because, you know what I mean? At the end of the day, everybody loves quick money. Okay. Scalpers does come with its pros and it comes with its cons. You know what I'm saying? So it's all depending on how you like to analyze price, your view on how fast or how fast you want to make some money type shit. You feel what I'm saying? And pretty much it all depends on you. You know what I mean? And your personality. You'll understand that trading lines up with your personality 100%. Okay. So if you're the type that if you already like fast money for my street niggas that's on here, you feel what I'm saying? I already know how I rock. We like that. We like that fast money. You feel what I'm saying? We like to be able to got to get in and out, make a couple hundred, got to be good for the day, make a couple racks, be good for the day. You feel what I'm saying? That's where a scalper will come into play. Okay. Scalpers use very small time frames to make multiple quick trades during a day. Okay. Scalpers use the 1 minute, 3 minute, 2 minute, 3 minute, 5 minute. You know what I mean? The highest that a scalper probably trades off of is the 15 minute. Okay. The same time frame that we was just paying attention to, that 1 minute time frame, we were just looking at 1 minute candlestick go up and down. A scalper, that's a scalper's paradise. You know what I mean? They're buying and selling that and getting in and out of the market based on those 1 minute fluctuations in price. Okay. Day traders focus on intraday time frames and close positions before the market close. So intraday time frames, now we're talking about 30 minute, 1 hour, 2 hour, 4 hour. Okay. We focus on those specific time frames for our entries, you know what I mean? And we look to hold trades throughout the whole day. Okay. So remember that scalpers like to get in and out of trades within a few minutes. You feel what I'm saying? Day traders like to hold throughout the whole day and close when the market closes. Again, what time does the market close? Somebody talk to me real quick. What time the market close? Time does the market close?
5.
5. All right. Market closes every day at 5 o'clock. Day traders like to trade in the morning or whatever time that they like to get in and close at 5. Be out of the market by 5. Okay, that's what day traders like to do. So they like to hold, get a lot of price movement, be able to catch a lot of pips, all right, be able to catch a lot of moves within the market, and close all that before the day. Okay. And it's usually probably like 1 or 2 trades versus scalpers. They can catch within a day's worth of time. A scalper can catch, you know what I mean? If you're really, really trading a lot, but you can catch up to 5 to 10 trades a day. You know what I'm saying? Within one session for real and be good. A day trader will really break that down to like 1 or 2 trades a day. You know what I mean? Um, Swing traders, okay, these are people that start to look at more higher time frames. You know what I mean? Your hours up to your dailies. You know what I'm saying? And they like to hold for days to weeks at a time. Okay, so swing traders like to catch, you know what I mean, daily, weekly moves. You know what I'm saying? I'm going to show y'all an idea of what that looks like once we slide back to these charts. Understand that swing traders, more risk involved, but there's a lot more reward involved as well. You know what I mean? Scalpers, excuse me, scalpers, less risk, less reward. Why? Because you're trading on a smaller time frame. You're going for smaller moves. Okay. Swing traders, more risk, more reward because you're going for higher time frame moves. So you're looking to hold for a longer period of time. The longer you hold your trade, the more money you potentially make. Okay. Then we have position traders. Okay, position traders aren't usually us. These are usually banks, hedge funds, things of that nature. People that have a lot of money. These are more of investors as well. You know what I mean? This kind of goes into like investing kind of. But position traders, you know what I'm saying? These people look at the daily, weekly, monthly, yearly time frames and like to hold for months to years. You know what I'm saying? So once again, that's coming back into investing and shit like that. That's what investors do. You can call investors position traders. You can pretty much, that's another word for it. You know what I'm saying? But the only difference is investors can't sell. You know what I'm saying? But position traders like to hold for a very long time. So that's rare when it comes to us as retail traders. You usually see most day traders and scalpers. You see a few swing traders out here as well. But when it comes to position traders, not a lot of us have the patience to hold a trade for months to years, and we want to go ahead and take our money. You know what I'm saying? So that's rare. But once again, if that floats your boat, by all means, go crazy. You know what I'm saying? Let's go take a look. All right. Now, shorter time frames offer detailed insights into price movements, okay, making them great for precise entries and exits, okay, while longer time frames provide a broader perspective, helping us traders identify trends and major key areas on our chart, okay. So if we go take a look, like, let's come back to trading view real quick, just so y'all can get an idea of what I'm talking about, okay. This is the daily time frame, okay. So we're gonna go right back to these highs we were just looking at real quick, okay. So these are these highs right here. Okay. This is the daily time frame. What does that mean? Every single candlestick that we're looking at right here represents a day's worth of time. Every single candlestick that we see right here opened up at 6 and ended at 5. Okay. So can everybody make sure that y'all are paying attention to the structure, make sure y'all are paying attention to how, you know what I mean, we got these highs right here, this high, this high, this high, and then we had that candle that eventually went up there and took all of it out. Okay. So we have all that. Now we're going to come down to a 4-hour time frame. Right. Now what? Every candlestick that we're looking at here represents not a day's worth of time, but 4 hours worth of time. Okay. So that means that what? How many 4-hour candlesticks are within a 24-hour time frame? 4, 8, 12, 16, 20, and 24. 6 4-hour, 4, 8, 12, 16, 20, 24. 4 6-hour candlesticks, right, creates one daily candlestick. But do you see how once we start coming down to a lower time frame, it's pretty much like zooming in on price, right? Getting a little bit more information the lower that we go down. Okay. So the daily time frame, once again, we look at this so we can keep getting an example. Okay. Daily time frame. All you can see is that on this day right here, price would open down here and close right on top of where she opened at. But you can see that she came all the way up here within this day's worth of time and then nodded and closed all the way back down here. Now you come down to that 4-hour time frame, and you can start to see kind of what happened with price once she got up to that high that you could not see on the daily, right? And what you see is here. Now you can see these candles actually approach this high. Remember, on the daily time frame, we just seen a big ass that came off. I mute that mic, mute that mic, mute that mic. Hold on. Remember, on the daily time frame, all we seen was that big ass wick that came all the way up here, and she closed all the way down here. I want a 4-hour. We zoom in just a little bit more, and we can see how price actually approached this high. We can see that this 4-hour candle right here is the one that took out all these highs. You know what I'm saying? And then snapped back down. On this 4-hour candlestick, she opened right here, closed here, and then she wicked here. You know what I'm saying? And she rejected here. Now we're gonna come down to a 1-hour time frame, right? We're just zooming in on price a little bit more at the exact same area, but just getting a little bit more information that we could not see on the daily. Okay. This is where us as traders start to look for our potential entries. You know what I'm saying? So coming back to that last slide, right? We were just saying how the higher time frame gives us a broader idea of what price can do, right? So we're back on this daily. You can see that, okay, for a few days, right? One second. Find that same area real quick. Boom. You can see that for a few days, right? Because this is the daily. 1 day, 2 day. We got another day that tried to come up here, and then we got a 4th day right here that came up here and pierced it. Okay. For all these days, we were sitting up here playing games. You know what I mean? So we already have an idea that, remember, technical traders believe that if it happened in the past, it could potentially happen in the future. So if we see price coming up to this same little area right here, you feel what I'm saying? She keeps rejecting that same area. Then traders start to get the idea that if it happened here and it happened here and it happened here, and price was sitting in right here from what? If we're looking at my crosshair and looking down here at the bottom, right? This is from from July 28th all the way to what? August 10th. Price cannot get on top of this little area right here. So it's showing that price is rejecting this area heavily. Okay. So technical traders see this and look at this area as an opportunity to start looking for trade setups. Okay. Then they start coming down to lower time frames to start looking for more information that price gives you to kind of confirm that price will go in your area. So the higher time frame is more for analysis, right? To be able to determine where you think price is going to go. It's for trend to identify key areas. Okay. You come down to your lower time frame, you start looking for a little bit more information that you could not see on the daily, and eventually start looking for your entries. Okay. So a higher time frame is more for a broader perspective. Lower time frame is for, you know what I mean, actually breaking down price action within your area, and looking for your trade setup. So if you was going to ask me what I was looking for within this area, without trying to overcomplicate things for my brand new people, what I would be looking at within this area is I see that price created what's called a double top right here. Okay. This is what I was going over on a different slide. Okay. On a couple slides ago. Understanding what a double top is. A double top shows rejection of a certain area. Okay. More specifically, resistance or a ceiling for price. Okay. So we have a price come up here and creates a high within this area, comes down, comes up to the same exact area and rejects it and sells off heavy. Okay. Then you see price came all the way up here and did the exact same thing. This is what people are looking for. You feel what I'm saying? You can see a lot more information here. So traders are looking at this as like, okay, if it comes back up here, I'm looking for the exact same thing. Me personally, I would have waited for this. Okay, this shows rejection. Okay, so we just understand it. We just broke down and understood what open, high, low, close is. So we were just on a daily. Now we're on the 1 hour time frame. Every single candlestick represents 1 hour's worth of time. I would have been looking at this candlestick right here and seeing how this 1 hour candlestick came up close to these highs. Okay, then pierced it. Remember, this white line is those highs to the level we were just looking at. She took out those highs. Okay. Or remember, the wick is rejection. That means she went all the way up here, snapped up here, couldn't take the heat up here, and came right back down. That's showing that this area up here is way too strong. And price is not going to have a very, very hard time breaking this area, and we should eventually get a sell off. Okay. So I would have looked at this candle right here, seeing that, okay, price cannot break on top of this area, especially with that wick rejecting those highs. And then right after that happened, she sold off very, very impulsively. So I would have waited for this to happen, and I would have catched one of these retracements within this little weak pullback right here. I would have caught one of this right here and sold it. You know what I mean? Yeah. That's what I've been waiting for right now. Okay. But does everybody understand, for my newer people, does everybody understand like the time frame? So let's come out like the 15-minute now. All right, 15-minute. All right, so now we're on the 15-minute time. Okay. Every single candlestick represents 15 minutes worth of time. Okay, we were just on the 1 hour, now we're on the 15. You can see how we're literally zooming in on price. You know what I'm saying? Literally. You know what I mean? You can see this double top right here a lot more cleaner. You can see price come up here to the same area here, rejected a lot more cleaner. Then you can see the move that I was just talking about. We're just looking at a 1 hour. Now you can see the 15. Look at what the 15-minute does. Come up here, you got that 1 15-minute candle that boom, pierces that high, snaps right back down. You can see none of these candles can even get back up here, and then it eventually sells off. That was looking like a 3-minute. Okay. Now every single candlestick represents 3 minutes worth of time. Same area, same exact thing, just getting a lot more information. And this time frame right here is where a majority of traders are starting to look for their entries. Okay, like this is where we're popping at. You feel what I'm saying? We're on a 3-minute time frame, 5-minute time frame, whatever. You gonna hold me like that, eyes? 1 second. Majority of traders are down here looking for these entries. You know what I'm saying? Lower time frame. Lower the time frame, the more precise that you can get on your entries. Right, trading view ain't not gonna let me go all the way back. I'm not gonna pay this bill for this. I don't, you know what I mean? I don't pay TradingView. But I'll break it down a little bit more over here. So just so you can get a little example real quick. See what I was looking at. Look at this low right here. You feel what I'm saying? Pay attention to where we're at right now with current price. Okay. See this low right here that we just created, that we just pierced at. Let's look at this on the daily. Okay. See these same lows we were just talking about right here. Stretch this out. Let's get this a little bit straight. Boom. It's on the daily time frame. Every single candlestick represents a day's worth of time. Okay. Go down to the 4 hour. First of all, come back here. Pay attention to that wick. You feel what I'm saying? Pay attention to that daily wick right here. How she got them sold all the way down here and then closed right here at 6 o'clock. Now we're on the 4 hour. You can see what actually happened within that big ass wick. She came all the way up here, took out a high, and then sold off. Crazy. This is a trade setup right here. I'll probably tell y'all to sell this in y'all demo accounts tonight. I'm not gonna lie. All right, but you can see what happened in this 4 hour in the daily wick that you could not see. Okay, come down to the 1 hour, just zoom in a little bit more, so you get more information. You feel what I'm saying? You can see how price reacted once you got down to these lows. And you can start coming down to like the 1 minute. You feel what I'm saying? This is once again where traders are looking for their entries. You can see you're literally zoomed all the way in. And now you can see, look at the 1 hour, right? And look at that big ass sell off right here. Look at this big ass sell off right here. Okay. And look at how on the 1 hour time frame, it's just literally nothing but downwards movement, right? Down, 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 down. Now you come on a 1 minute and you can see what actually happened within that downwards movement. You feel what I'm saying? Now to the 1 minute, and you can see what actually happened within that downwards movement. And within that downwards movement on the 1 hour, you see price 1 minute just sold off something crazy. That's 1 minute right there. Imagine you popping a sale right here, and in 1 minute you catching that candle. That's bank. You know what I'm saying? That is money right there. You feel what I'm saying? But you can see within those 1 hour straight sales on the 1 minute, what was happening within that, she sold off, retraced, sold off again, gave another retracement, sold off again, gave another retracement. So you can actually see what is happening. All you're doing is zooming in on price by going down on your lower time frame. If you understand time frames and the difference between them and understand that coming down to a lower time frame is simply nothing but zooming in on price, okay, you understand that the higher time frames are more or less for a broader view and analysis, while your lower time frames are more or less for your entries. Okay, if you understand all that, drop a 2 in the chat before we do the push. All right, I know I just spent a lot of time on that, but I want to make sure that everybody understand that. That's something that I kind of struggled with. You feel what I'm saying? When I was trying to get right when it came to like time frames, like, damn, what time frame do I pay attention to? You feel what I'm saying? The answer to it is you have to use all of them in correlation with each other. You feel what I'm saying? That's why I say that technical traders use what's called a top-down analysis, which is what you just watched me do. Remember when we were just looking at those highs on the daily, and I said, okay, price that came up here 1, 2, 3 times. So I've been sitting here for a week. Okay, come down to the 4 hour. I can see how price rejected that high. Okay, now I come down to the 1 hour. I showed you exactly how I would have popped that trade. That's what's called a top-down analysis, but coming down from the higher time frame all the way down to the lower time frame to find your entry. Okay, so you don't just use one time frame; you use all of them in correlation with each other into the lowest time frame that you personally get down to the trade. So if you're a scalper, you'll be on the 1 minute. You feel what I'm saying? Catching little 1 minute moves. Like a scalper will be doing something like this, family. So let's go ahead and break down the different traders real quick too. Okay, a scalper will be on the 1 minute time frame doing something just like this right here. Probably got down selling this. You feel what I'm saying? Like trying to catch a sell up here, catching this little 1 minute sell off. So this is probably like what 10 minutes worth of price action, 15 minutes worth of price action. Selling here, taking your money here. You feel what I'm saying? Like that's what a scalper does. Selling here, taking your money here. You feel what I'm saying? Selling right here, taking your money here. Right? Selling here, taking your money here. You see how many different opportunities, you see how many price fluctuations you get within this 1 minute time frame. You see how many up and down movements you get within the 1 minute. This is a scalper's paradise right here. A scalper will be trying to catch every single one of these up and downward movements here. Boom, buy here, sell here, buy here, sell here, buy here, sell here. And they are able to catch a lot of different trade sales within a day. And their risk is lower, but the reward is also lower. Why? Because they're catching smaller movements, right? So this is what a scalper will be doing, in and out, boom, 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 boom. Okay, a day trader will be on some shit like this. Okay, let's look at something like this right here. Okay, a day trader will be on something like this. A day trader will be trying to catch a move similar to this. Okay, understand that this right here is on Wednesday. She sold all the way down here, and this look at where price ended at. same Wednesday. Okay, this is all within the same day. Look at my crosshair. You feel what I'm saying? Wednesday, Wednesday. So this is straight selling. This is what a day's trader will look for. Okay, a whole day's worth of price movement. This is the whole day's worth of selling for this particular day, which is Wednesday. This is today. This is yesterday. Okay, this is what happened yesterday. You feel what I'm saying? So this is all of yesterday's sell movement. You feel what I'm saying? This is what a day trader will be looking for, trying to capitalize on all this. Okay, so that's why I said a day trader will probably be looking for 1 or 2 trade sales within a day, because they're looking to catch something like this, sell here, hold all the way down here, and take profit wherever they take profit at, no matter if that's somewhere here, down here, wherever. You feel what I'm saying? They taking their money, but the whole goal is to catch the majority, if not all, of the day's movement. You know what I'm saying? You got a swing trader. You feel what I'm saying? A swing trader will be on some shit like this, trying to catch it from like here, right? This, and remember, this high right here was created at what, September 23rd. All right. And right now we at what? I'm sorry. I got my dates wrong. This is September 4th. My apologies. September 4th. And right now is what? September 21st. So a person was trying to catch a sale from like here all the way down to like somewhere down there with this area and hold for days within the time. You feel what I'm saying? You see how this high was created on a Monday and she sold all the way down here and got here by like Thursday. You know what I'm saying? This is what a swing trader will be looking to take position of, holding for multiple days and catching a lot more price action. You feel what I'm saying? And then you have what's called like a position trader, which is none of us. You know what I mean? But when the position trader will be on these higher time frames, trying to catch moves like this. You feel what I'm saying? Buying all the way down here and riding it all the way down here. This is a whole year's worth of trading. You feel what I'm saying? This low down here was recreated in October of 2022. You know what I mean? So this is damn near a year's worth of trading. This right here is what a position trader would be going for. Something similar to this. Holding all the way down here, catching major, major, major moves, but having to hold for a way longer period of time. Okay, so depending on how you would like to trade, how you like to make your money, your personality, that determines your trading style. You know, no matter if you're a scalper, day trader, swing trader, and like I said, nobody's on here going to be a position trader. So really, it boils down to the three, right? Day trader, scalper, and swing trader, right? I think that day trading is the wave. I'm not gonna lie, but at the same time, if you like that quick money, scalping is where it's at. But if you understand the three different traders, you know what I mean? Go ahead and drop a one in the chat real quick. I don't mean to keep telling y'all to drop shit in the chat. Just want to make sure that everybody's on the same page because I keep going over new things. So if you understand all the different traders, now go ahead and drop a one in the chat. The difference between scalpers, day traders, and swing traders. All right. And then we're gonna go ahead and slide back to this PowerPoint. Need to see some more ones in that, y'all. I be feeling like I be talking my head off on the guys. Word. Oh, all right, let's keep it pushing. We got a long way to go. We got a lot more information, y'all. Ain't gonna lie. Okay. Support and resistance. Okay. So we were just taking a look at example of resistance. Remember, we were just looking at that Euro USD chart, looking at those highs, you know what I mean, and broke down that whole little sale that happened from there, right? That was an example of resistance, okay, or a ceiling for price. So let's break down support and resistance. So support is a price level where a currency or an asset, whatever that you're trading, tends to stop falling and may bounce back up. Okay. So if you look at this little example down here, I know it's real, real small, but just take a look at the chart right here. You know what I'm saying? We were just on the chart, so everybody should be nice and familiar with this. Everybody see these lows that price creates. You feel what I'm saying? Boom, 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 boom. Price has a tendency to do things like this. You feel what I'm saying? To where it creates floors for price. That's what we'll consider support as a floor, right? It can't break below a floor. Support is supporting price. Okay. When traders see that price has created a floor in the past, they look for a similar reaction once price returns to that same area. Okay. Traders view support in the market as easy buys. So similar to this right here. You know what I'm saying? Resistance is like we was just going over on that last one, is a level in price where currency often stops rising and may look to reverse. Think of it as a ceiling for price. You feel what I'm saying? So if we're looking at this right here as our example right here, you see our price created highs, highs, highs. And in the past, every single time it comes up to this high, it reverses. You know what I mean? So traders are looking at this area to look for price to do the exact same thing and catch easy sell setups. You know what I mean? So if we go right back to trading view real quick, we were just going back over this. But if we're taking a look at something similar, let's come to the higher time frame, like a 4 hour. Real quick. If we get to looking at something as simple as this. And we can start right here with when it comes to support. Okay. So when it comes to support, remember that support is what? The floor for price, right? And price has a tendency to come down to specific key areas on your chart and stop and reverse. You feel what I'm saying? And sometimes price can do that multiple times. And that can be a clear indication that this area down here can be a major level where price can't break. It will be looking for a major reversal off of. Okay. So this is what we will be viewed as support. Okay. An area where price tends to cannot break below. Okay. So when technical traders are looking at shit like this and they see that price can't break through a specific area in the past, the odds automatically get glued to that. You feel what I'm saying? So whenever price comes back to a specific area, they're looking for what happened in the past. Remember that the name of the game when it comes to technical traders is if it happened in the past, it happened to fuck again. You feel what I'm saying? So they start looking for indications or confirmations that price will give you the same reaction that it did in the past here. You can see it came down here one time, 2 times, 3 times. Each time it gave you a nice buy, but the third one gave you the one that really left. Now, I mean, it's a reason behind that. You know what I mean? For my smart money traders that are on here, y'all can see that. Y'all can see that run on that low, pierce, then turn around. You feel what I'm saying? But that's advanced. Okay. But understanding that this right here is major support, and traders look at this and look for buys off of shit like this. And this is all over your chart. You'll not never be able to not find support in resistance. You know what I'm saying? Little shit like this. Areas where boom, price comes down 1, 2, 3, 4, 5, 6, 7, 8, 9 before eventually breaking through it. You feel what I'm saying? That's 9 different trade opportunities that you get to buy off of the exact same area. You feel what I'm saying? So that is support. You'll find this all over the place. And that can be like this is on every single time frame too. You know what I mean? So we come out to like a 1 minute. You know what I mean? Start looking at shit like this. I know y'all can see this was right in your face. You feel what I'm saying? We got nice support. Price tends to can't break through this low. So this is scalper's paradise right here. They're buying this every 1 minute. Boom, boom, boom. They're buying that. These are quick trades versus resistance. Okay. Price can't break through specific highs. Okay. Getting up to specific areas and acting like it can't break through. Boom, boom, boom. And then price done eventually did what? Break through the support. It just broke through it. So now traders are looking for something else to happen, which that's it. I'll go over that tomorrow. You know what I mean? But that is your example of support and resistance. Understand that this rests on every single time frame. The higher the time frame that your support or resistance you're looking at rests on, the more weight that it holds. So if we're talking about a little 1 minute support or a 1 minute resistance, like you see how easy prices broke through this shit, didn't take no time at all. If this is on a daily time frame, it wouldn't be this easy for price to just sell right through it. It would not be that easy. You know what I'm saying? So the higher the time frame, the more weight that your support and resistance holds. But understand this is as simple as it gets. You feel what I'm saying? When it comes to understanding or starting to learn how to predict where price is going to go. This is as easy as it gets. Looking at support, looking at resistance. So if I start looking at shit like this, right? And I start looking at this low. You see these 2 lows down here? This low and this low. Boom. Right? I can see that price done came down here at one time, bought off of it something stupid. Came down here a second time and did what? Bought off of something stupid. So what is that telling me? If price comes down here to this exact same area, then I will be looking for a similar reaction. And I will start coming down to my lower time frames, my 1 minute, my 3 minute, my 5 minute, to start looking for my entries to catch a buy in hopes that it will do the same thing that it did here. You know what I mean? Versus resistance. Let's find y'all one more example of resistance real quick. All right, like looking at these highs right here. Boom. Okay. Price cannot break through these highs. Okay. It tends to come up to the same area, act like it cannot break through. Okay. There may be times when price like wicks above, but remember what wicks are. Wicks are rejection. You know what I'm saying? So price can come up here and hit an area and reject it. That's just as important. You feel what I'm saying? But understand that price cannot break through a certain area. Traders have their eyes automatically glued here. Next time price comes up here, they will be looking for the exact same thing to happen. You can see that price touched this 1, 2, 3, 4, and it came short of it a couple more times before she eventually sold off. Okay. That's your support and resistance in a nutshell. You know what I mean? It's about as simple as it gets. You know what I mean? If that makes sense for you, give me a two-ski. Give me a two in the chat before we keep pushing. Support and resistance. Floors and ceilings for price. Support. Price could not break through this area. 1, 2, 3. Those are easy buys. Resistance. Came up here 1. That's a sell. Came up here again. Sold off again. Came up here again. That's another sell. Came up here again. Y'all see what happened from there. So you have easy support and resistance. That's about as simple as it gets to being on your journey to start being able to predict price. Okay. Only 2 twos is crazy. I'm not gonna lie to you. Only 2 of them in the chat is insane. So if something's not making sense, you know what I mean? Let me know. Let me know. Make sure I'm not tripping. Run it back. Run it back. Support. Okay. Look at this area right here. Y'all, I need, you feel what I'm saying? If you have any questions or if there's something in particular I'm not going over specifically that you need to understand, by all means. You feel what I'm saying? By all means. On the area that we did not go over. All right, let's look at trying to find like a real good sideways market. Okay. Not to a higher. Look at this. I mean, look how long price sat in this area and boom, boom, booming up. I want to find something that's a little bit wider, a little bit broader. Okay, like this. Okay. Look at this area right here. Look how long price sat within this area. Okay. So does everybody see the tendency that price does once she gets up to certain key areas within this is what's called a consolidation range. Consolidation means that price is not trending. It's not going anywhere. It keeps coming up. It keeps coming down. It's only going up and down and up and down and up and down. It's not trending. A trending market looks something like this. You see price going down. This is called a downtrend. But when you have price moving sideways, this is what's called a consolidation market. This is where you'll see most of your support and resistance come into play at. Okay. But right here, look at that. Look at these highs right here. Okay. Look at this area on the chart. And notice the tendency that price likes to do when she gets up here. What does she do every single time price gets up here? Somebody tell me real quick. What does price do every single time she gets up to this high? What does she do? It rejects it. Okay. It rejects it. It sells. You feel what I'm saying? So if I see this, if a trader sees this, and remember that technical traders go off of if it happened in the past, it should happen again to a certain extent. If we see this, then eyes automatically get glued to this area. Price comes up here again. I'm automatically looking for signs for her to do what? Reject, sell. And these are easy sales for us as technical traders, just paying attention to what price did in the past. Looking at ceiling, resistance. Think of it as a ceiling for price. Price cannot break through it until eventually it does. Like it will always eventually get breaking through. But for the times that it is rejecting, your job is to figure out if she's still rejecting and pop a trade based on it. You know what I mean? You have areas like this down here. This is what's called support, okay? Or a floor for price. Price cannot break below this low. Every single time she comes down to this specific key area, she does what? Rejects and turns around and buys. Okay, she does that every single time. She cannot break below this key area. This is your floor for price. This is what is called support. And traders would have their eyes glued to this area because every single time it did it in the past, it turned around. So these are easy buys for support and resistance traders. Price comes down here, they're automatically looking for signs and indications that she will do the same thing that she did in the past. She came down here once, twice, 3, 4, 5, 6 times. Then she stopped short right there for a 7th time before she eventually bought up. You have 7 different opportunities to buy this exact same area by just being patient and waiting for price to get there. You know what I mean? So support and resistance is a very easy way for you to start predicting where price can go. Just pay attention to past data. What did price do when it got to this specific area in the past? I mean, what did it do? Did it reject heavily, right? Or did it break through it, right? You can see price came up to these areas and rejected heavily every single time. So eyes get glued to it. I'm looking for sales. It came down here, rejected heavily every single time, bought back up. Eyes down here looking for buys until eventually she breaks through. Because once again, every single high or low will eventually get breaking through. Okay. Look at shit like this right here. Price can't break above this area. You can have this about as big as you want to get. You know what I mean? But keep it nice and precise. Keep it nice and precise right here. 1, 2, 3, 4, 5 times she came up to the exact same area, could not break below it. So what is that? Support or resistance? Somebody talk to me real quick. Support or resistance? This. Pipes out. Resistance. Okay. Resistance. Ceiling for price. Cannot break below it. Cannot break above it based on past data. So eyes get glued there. Traders are looking at this area to catch a trade off of. Okay. Sometimes you get waxed on that. You know what I'm saying? As you can see, nigga would have got waxed right here. You know what I'm saying? Because trading is not all about support resistance. But this is just the one of the many ways that traders look to analyze price. These are the basic ways that traders look to analyze price. This is the most easiest way that you can get started with your trading career. Start to look at price and understanding what and why price does certain things. Okay. Support and resistance. Okay. I don't know if I already told y'all to drop some ones in the chat, but I'm gonna act like I already did. Okay. Oh, matter of fact, no, I need somebody said they wanted me to run that back. So if it makes sense now, you know what I mean, especially for whoever told me to break it down, let me know real quick before I keep pushing. Support resistance. But y'all the most uninteractive people in the world, boy. I tell you, boy. It's all right, though. I promise you. Good. Let go. Yeah. Let's do it. That's support resistance in a nutshell. On to the next one. Trends. Okay. Trends are the general direction in which a specific asset or currency is moving. Okay. A chart can be bullish, moving upwards. Okay. Bullish means upwards. Make sure you write this down, y'all. Make sure y'all taking y'all notes. All right. A bullish market means that it's trending up. The value of whatever we're talking about is rising. Okay. Bearish means downwards. Okay. Price is selling. Okay. The value of whatever we're talking about is decreasing. See the chart move in the downwards direction or in consolidation, as I was just showing y'all, right? As far as support and resistance goes, sideways market when price tends to not is pretty much an indecision in the market. Price cannot go anywhere. It can't break below a specific high or specific low. It's usually used for accumulation, but that's more advanced. But understand there's 3 different types of markets. You got an uptrending market, a downtrending market, and a consolidating market. Range bound, sideways. Okay. Identifying trends is a critical part of technical analysis. It should be taken into consideration for every single trade that you take. In my opinion, if the trade isn't based off the higher time frame trend, I don't want it. That's why I was just saying earlier, higher time frame rules off. Okay, so real quick, back to the trading view. Ain't gonna spend too much time on this. This is easy. Okay, we already know what's going on here. So if I'm looking at, and remember, trends can change too. Trends can change at all times. Okay, but we're just going to start looking at, identify some shit I want y'all to tell me. Uptrend, downtrend, or consolidation. Okay, so if I'm looking at this specific area right here, 1 second. I'm looking at this from here all the way down here. Bullish, bearish, or consolidating. Talk to me.
Bearish.
Bearish, right? We're moving downwards. Right? The value of what we're talking about right here is decreasing. You know what I'm saying? So this is bearish, right? Let's look at the area like this right here. This little rectangle right here. What is price doing in here? Are we trending? Are we up trending right here? Are we down trending right here? Or are we moving sideways? Are we consolidating?
Consolidation.
Consolidation, right? Price cannot break through lows. It cannot break through highs. It's a sideways. She's not going anywhere. This is an indecision market. She don't know if she want to go lower. She don't know if she want to go higher. And then eventually she breaks out into what? What does she break out into?
Bullish uptrend.
Bullish uptrend. You feel what I'm saying? Bullish uptrend. Okay. Let's get a little bit more in. A little bit more in right here.
Hey, so I got a question.
What up?
So that bullish uptrend, that's when you're supposed to put your money in, like right before it go up.
That ideally, yes. That's the whole goal. You feel what I'm saying? With the whole goal of trading is to predict where price is going to go before it gets there, catch you a buy down here, and catch the move before it happens. You feel what I'm saying? That's the whole goal of trading. So yes, bro. You feel what I'm saying? You're trying to catch, like you want to catch this breakout. You feel what I'm saying? So whenever you start seeing price move in your upwards direction, whatever confirmation that you came to your conclusion, okay, price is going to buy from here, you'll pop you a buy somewhere down here in expectations that, of course, price will go upwards in your direction. You know what I'm saying?
All right, so you can buy a downtrend too, can?
Yeah, you can buy a downtrend, but that would be I mean, that's the reason why we're going over trends. That's ass back. You know what I'm saying?
All
No
right.
matter which, it don't matter which way price is going. You can buy, sell, do whatever the fuck you want to do. But the whole goal of trends, the whole goal of this little slide right here is to understand that you want to be trading with the trend. You feel what I'm saying? So if I'm looking at where price is at currently right now as we speak, right? Right now as we speak, let's look at where we at right now. Okay. We're looking at where we at right now and what we've been doing for the last, since July. You dig what I'm saying? From July to where we at now. If I'm looking at this right here, what is this telling me price is doing? Are we uptrend, downtrend, or consolidation?
Downtrend.
We're downtrending,
Yeah,
right?
downtrend.
Sure. So it makes sense for me to only do what? Buy or sell? Sell. Go along with the trend. You feel what I'm saying? If price is selling, if you see that price has continually been selling, why are you buying? You go along with what price is trying to tell you. This is a selling market, so you find your way in for a sell. Remember that the higher time frame is for what? Broader analysis, understanding what the trend is. You know what I'm saying? I'm on a daily time frame. I'm looking at what's been going on since July. It's been selling this ass off. You dig what I'm saying?
Okay, so
So now,
a
go ahead,
bearish,
man.
my fault.
You good? Go ahead.
A bearish is a sell and the uptrend is a buy.
Correct. Correct.
Uh,
When you're looking at uptrends, so like look at shit like this. Okay, so we just identified this right here as a sell. If you see prices has been selling off in the past, it'll be smart for you to pop a sell and get in with what the trend is telling you. Because when you sit here and look at, remember that red candles represent what? What do red candles represent? Bullish or bearish day, or bullish or bearish?
Bearish.
Bearish, right? Okay, red candles represent bearish. So look at how strong price has been selling since July, and look at the difference between the red candles and the green candles. Look at how many red candles you got versus how many green candles you got. Look at how small these little candles get, you know what I'm saying, versus how impulsive and how many back-to-back selling candles you get. Of course, you get a couple pullbacks every now and then because in a trend, price has to pull back. You'll never see price just selling off like going crazy without pulling back. These are called retracements. It has to happen in the market. So you will see buys within a selling market. But understand that when you're seeing a selling market, look how short-lived every single buy is. It should last a day's worth of buying for a week's worth of selling, a day's worth of buying for a week. You know what I mean? So every single buy is short-lived. It's telling you to buy. I mean, it's telling you to sell. You feel what I'm saying? So it'll be right for you to go on your lower time frame to start going along with what the trend telling you. So if I'm seeing that, now look at the 15-minute time frame. And look at how slowly but surely this motherfucker has been dropping its draws off. You feel what I'm saying? Look how short-lived buys get. Look how impulsive and how long the sales get. Right? Look how shit like this right here. You know what I'm saying? These are moves that you are trying to catch and just riding it all the way down with the daily time frame is telling you. It's slowly but surely making its way downtown. You feel what I'm saying? So our time frame is telling you bearish. I would like to be selling that to go along with the trend. If at any point the trend changes and it turns to bullish, of course, price will always give you an indication that's a little bit more advanced, but price will always tell you that. And if it at any point it turns to bullish, I would start looking for buys. So let's find like a bullish market. If your USD is selling, that means USD cash. Right? It was. Boom, right here. Okay, I want to find a more bullish market like you. Okay. So if I'm looking at shit like this right here, okay, let me delete this real quick. I'm looking at a market like this. This is obviously bullish, right? We've been buying our ass off. all the way down here since what? July. Just like how on Euro USD was selling since July. USD CAD is buying since July, right? Look at all this upwards movement. Price has been doing nothing but going up. So if price is telling me on the higher time frame that since July, we haven't been doing anything but upwards movement, what should I be doing? Should I be buying or should I be selling? Buying. Facts. I should be buying. I don't want to look for no sales. I want to look for buys because the trend is bullish. Okay. Now, sometimes you'll have sideways markets. You'll have markets that aren't going anywhere. You know what I'm saying? Like, we were just going over consolidation. Let me find a consolidating market. Like this right here. This is gold. Okay. Price of gold. Price has been sitting within this little range right here. These highs. I mean, these lows right here. Oh, that's wrong. My bad. These lows. These highs. Sitting within this area. We got support. We got resistance. So this is what's called a consolidation market, sideways. When you have markets like this, you kind of have to go along with a little bit more indications. You'll have to start going down to your lower time frame. Start paying attention to what? The lows and the highs. So you don't necessarily start going off of the trend. You can't necessarily say, okay, I'm just going to be buying this simply because the trend is bullish, because there's no trend right here as of right now. So what would your eyes get drawn to? Support and resistance. And you'll wait for price to get down to the key areas that you pivoted from in the past. You'll look for specific trade setups based on that. Okay. So remember, for a bullish market, if price is buying, you will be on your higher time frame. Like a price is doing something like this, has been doing something like this for a long period of time, or within the recent past, right? Then you will only be looking for buys based off of the trend. If she is selling something like this is a selling market downtrend, then you will be looking for sales based off of what the market is telling you. If you have a sideways market, then you start paying attention to support and resistance. Okay. Does that make sense? Okay. Uptrends, downtrends, sideways markets. Drop a 1 in the chat for me.
So I got a question.
What's up?
How far should you be looking back to identify a trend? Like how far should you look on the charts?
That depends on how specifically you trade. Okay, that comes back to all the different types of traders: scalpers, day traders, swing traders. Okay, if you act consolidation is sideways, correct. But if you ask me, I'm gonna always say the daily time frame. I'm a day trader. I go everything that I do, everything that I teach, any way that I make my money, it's always going to be based off of the daily time frame. Remember what I told y'all: the higher the time frame, the more weight that your analysis is going to hold. So if I'm looking at a weekly time frame, right, and I love the weekly time frame too, it's just that the daily gives you, you know what I mean, the perfect amount of information between the monthly, weekly, and daily. You know what I mean? But I'm looking at the weekly, for example, right? Let me delete this real. Okay. I'm looking at the weekly. Okay. And I'm sitting here looking at how this motherfucker's been buying since what? October of 2022, last year. You know what I'm saying? So for a whole year straight, she's been buying her ass off. You feel what I'm saying? So this uptrend by itself is going to hold way more weight than me coming down to a 15-minute time frame and trying to catch like a sell, you feel what I'm saying, based on some 15-minute high. Does that make sense? You know what I'm saying? Like the higher the time frame, the more weight your analysis is going to hold. So if you ask me how far you want to be looking back, I'll start off with my daily time frame and not necessarily a specific amount of time, like, okay, look back 3 weeks or look back a month. But that can specifically depend on the market. You do what I'm saying? So let's look at a couple of different markets so I can show y'all. Look at Euro GBP. Some random markets that I'm going to take a look at. Okay. And this is why you have to pay attention to recent market structure. You can't necessarily go too far back because that can fuck you up. What do I mean by that? Look at this right here. Price was selling his ass off. This is a clear downtrend, correct? She was selling his ass off right here. But that's over with because what is Price doing now? She's buying, right? We just moved this motherfucker over. Yeah. To where Price is at currently. He is now in what? An uptrend. You feel what I'm saying? Based on what Price did within, and this is what, a month's worth of time, right? So this is like a month's worth of time right here. But it all depends on what what chart you're looking at, where the chart is specifically, and like really what the chart is trying to tell you. You feel what I'm saying? The amount of time that you look back to determine your trend varies on the chart. You feel what I'm saying? So this is Euro GBP. We just looked at this. We determined it was in the downtrend, but it just turned into an uptrend last month. Okay. Let's look at something different like NZDCHF, the New Zealand dollar against okay. And we're looking at this right here. Now, this motherfucker has been selling his ass off for God knows how long. You know what I'm saying? Been selling. And has been doing it nonstop, like since what? 2021. 2 years of selling. You feel what I'm saying? And if you go look at where price is at now, I know this because I've been trading this motherfucker. All my students will know this as well. We are at all-time lows. What does all-time lows mean? As you can see, look at it all the way over here. This says 1980 right here. This is when the market opened. Price has never been this low before, ever. What does that mean? Price is so bearish that it's creating new floors. It just keeps falling. The places that the value has never been before. What is that telling you? Should I be buying this motherfucker? Yes or no? Drop in the chat. Should I be buying a chart that's creating new all-time lows? Yes or no?
Hell no.
Hell no. You know what I'm saying? So, and that's from this is from 2 years worth of information. You know what I'm saying? Since like, you know what I'm saying? We based that off of what, this high over here? You know what I'm saying? Or this high right here in 2021? You dig what I'm saying? We based it from this high. In all actuality, if I come back to the monthly, bro, this bitch has been selling since what? 1980. 1980. You dig what I'm saying? So once again, your trend depends on, first of all, the way that you trade, but more importantly, the chart, you feel what I'm saying, that you are paying attention to. That can vary. But does it make sense though, gang? Like the fact that it varies on the chart that you're paying attention to. Does that make sense?
Yeah, it makes sense.
For sure. For sure. For the rest of y'all as well. Drop a one in chat if that makes sense for the rest of y'all. I just fucked up my shit. I'm not gonna lie. Hold on. Oh, where's my candlesticks, bro? I can't see nothing no more. I know I did some dumb shit just now. I can't figure out what I did. There. All right, bet. Ones. For sure. All right, bet. On back to the PowerPoint. I told y'all we got a whole bunch of information tonight. I hope y'all stay up with me. So I'm gonna put y'all on game. Indicators, okay? Indicators are something that I do not use. You feel what I'm saying? I technically don't give a fuck about. You feel what I'm saying? So this is not something that I'm going to teach you about. Okay. Or I'm going to show you it. I'm not going to break it down or like how I just did support resistance and whatnot. Why? Me personally, I believe that indicators are bullshit and they're right there to throw you off. But at the same time, you have to understand what an indicator is and how it could potentially help you, because people out here are making a lot of money off of indicators. So it's all about how specifically you trade. Me personally, I like to trade off of pure price action, nothing more, nothing less. I don't want any distractions on my chart. So I don't use any indicators, okay? But at the same time, there are different tools and indicators that are out there that help you make a decision on your trades that you take, okay? You can sell on any type of chart or buy, correct? Any type of chart that you are trading off of, you can both sell and buy, all right? Indicators are tools that are given to you to help identify trade setups, okay? These are pretty much mathematical calculations based on price, volume, or open interest, okay? Indicators help traders spot potential entry and exit points. Some examples of different indicators include an RSI, which stands for Relative Strength Index, a moving average, okay, moving averages, SMAs and EMAs, stochastics, okay, and moving average convergence divergence, which is a short, everybody calls it the MACD, okay. These are just different indicators. There are like literally thousands of them. I'm gonna show y'all a couple of them and how they work. I really don't even know how most of them work because once again, I don't trade them, but they're here for your discretion. So if there's any indicator that you would like to take advantage of, just do your own research on it. All right. Once again, there are thousands of indicators out there that can help you find good trade setups. I personally don't use them, but that does not mean that they cannot be helpful to you. Okay. So I'm gonna take a look real quick of like, you know what I mean, a couple of them. So if you want to pay attention to indicators on my trading view right here, as y'all can see this top right here, it says indicators, metrics, and strategies. You'll click on indicators, and once you click on that, it gives you a whole list of indicators that you can take advantage of. And these are just like the main ones. You feel what I'm saying? There's a whole bunch of other ones that people create themselves and post on here. or whatever the case is. And once again, to be honest, I don't know how to use majority of all this, but I'm just going to show y'all the ones that I kind of know how to use a little bit so you can have an example of how it indicates a potential move for you. We're looking at something like the stochastic, okay? The stochastic shows overbought and oversold conditions within the market, okay? So if this white line down here, or these lines that are right here, if it's above, y'all see this little blue box, okay? If the line is above the blue box, then that indicates that price is overbought and the sale should be happening at some time soon, okay? If the line is below the blue box, that means that price is oversold and it should be turned around for a buy anytime soon. So if you start looking at, price here, oh, I mean, start looking at price. Okay. We start looking at what's going on right here. Look at my crosshair. Look at where the look at where the stochastic's at. You can see that when price created this low right here, it came down to what? Support, right? Support. Okay. Because price was just right here. How many times? 1, 2, 3, 4, 5. You feel what I'm saying? So on the 6th tap, she's down here again. People use an indicator like the stochastic to understand that, okay, price came down to support. I'm already looking for buys. This stochastic says that because this line is all the way below this blue box, that indicates that price is oversold. Price has been selling off too much. It should be turning off for a buy at any time soon. See that when price gets down there to that support, the stochastic lines up with oversold and eventually turns around and buys. You know what I mean? So that's how people pay attention to the stochastic. Looking at right here, this little resistance area right here. You feel what I'm saying? Price comes up into this area. We got resistance, price coming up, creating highs, can't break above the high. You know what I mean? Can't break above this key area. As you can see, every single time price gets up to these highs, where's the stochastic at? It's at oversold. That means that price should look, it's been buying up too much and price should look to turn around at any point. You know what I mean? So the stochastic lines up with price being up at a resistance area where it should turn around anyway based on past data. They add the stochastic in there. The stochastic says it is oversold, and that lines up to sell. I mean, so that's how people view indicators. That's like one of the only ones that I really know how to use. When I first got introduced to trading, this was something that I was paying attention to. But as I got deeper into my trading knowledge, I started to figure out that although stochastics can be helpful, they are based on past data. You know what I mean? And although past data can be helpful, as y'all been showing y'all this whole time, just because past data did something before does not mean it'll happen in the past. So we're looking at resistance right here. Boom, 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 boom. Price came up here and sold off. Look at the support that's right here. Price came down here and did what? 1, 2, 3, 4, 5. But then it did eventually what? Sold right through it and started a whole new trend. You know what I'm saying? So just because it continued to happen in the past don't mean that on the opportunity that you're trying to take advantage of, you'll do it again. Stochastic is 100% based on past data. You know what I mean? So that's why I don't personally pay attention to it. Most indicators, if not every single indicator, is based on past data as well. You know what I mean? I'm not really here to break down the indicators. Once again, I don't really use them. I don't really advise them. But once again, if you need help with analyzing price action, that's what they're there for. Okay. Another one that I know people use is what's called an EMA. Okay, which is a moving average exponential, right? And there's a whole bunch of different levels for that I don't feel like going over. You feel what I'm saying? But long story short, EMA is used to pretty much like get trade signals based off of and identify the trend based off of. You know what I mean? So you can see how many times price like bounce off of this line. This blue line right here is what's called your EMA. You know what I mean? It represents the moving average. And as you can see, every single time price comes like to this blue line, it gives you a couple trade signals to take advantage of. Here, boom. Here, boom. Here, boom. Sell, 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 sell. When price gets on top of the blue line, you see she starts to buy. When price is below the blue line, she starts to sell. And every single time she comes down to touch that blue line, she gives you a potential trade. So as you can see, every single time it's not picture perfect. You feel what I'm saying? Sometimes you'll get chopped up and spit out through here. But the whole goal of the EMA is to identify trend. Understanding that the price is below the blue line, it should sell. Prices on top of the blue line, it should buy. So the fact that price is on top of the blue line now, based on what the indicator says, you should see bullish momentum. You know what I mean? And price just bounced off the blue line. So, you know what I mean? Based on the indicator, you should see price buy. Okay, that's what this indicator suggests. Okay. So once again, if that's something, if indicators are something that you will want to take advantage of, do your own research on it. I'll give y'all some places that you can like really dive into indicators. Once again, if you ask me, I advise to study pure price action. You know what I mean? That's just the way to go. I don't need any type of indicator that can potentially throw me off my analysis. But once again, I'll put that in the chat for y'all if y'all need that information. It's always good to look into all the different tools that you can take advantage of to become a good trader. Okay. And just because I say that indicators aren't good or that you can't or that you shouldn't use them doesn't mean the next man doesn't. I can sit here and tell a person that made $1 million off of indicators not to use the indicator and they'll look at me like I'm stupid. You know what I'm saying? So to each his own, whatever floats each other's boats. That's the whole name of the game. If I don't works for you. Okay? But there's a whole bunch of different indicators. So yeah. Go do y'all research on that. I'm good on them though, to be honest. Chart patterns, okay? A chart pattern is a formation in price that often indicates a potential impulsive move, okay? Traders study these specific patterns to predict future movements. Some chart patterns include head and shoulders, okay, double tops, double bottoms, cups and handles, and rising wedges. So this is what we call retail trading patterns, okay? This also is not something that I particularly go over for my trade setups, but this is something that majority of traders do, and they are very easy to identify as long as you study them. You know what I'm saying? So I'm gonna go over whatever is the quickest that I can find. I'm not gonna spend a whole bunch of time trying to find them. If y'all want to study those, dive into it on your own time. You know what I'm saying? I'm gonna show y'all a couple of examples of what I can find. We got like right here. Okay, this will be an example of a double top. Okay, right here. So you see how price comes up here, double tops and like double bottoms. That is another reversal pattern. It's like M's and W's that you see within the market. So you see how price comes up here, creates a high here, retraces down, comes up to that same area, rejects it, and then sells off. That is a whole M right there. That is what's called a double top. Get a one top, two tops, double top. So people are viewing this as what? Support and resistance. Somebody talk to me. People are viewing this as what? Resistance, right? People are viewing this as resistance because of this double top. Next time price comes up there, they're looking for a sell. Y'all can see price comes up here and sells. I mean, so that's an example of a double top, okay? Double bottoms will be the same thing, but vice versa. You feel what I'm saying? So if I can find one real quick, without spending too much time trying to find one, this right here is a perfect example of a double bottom. Look what happened right after that. That is insane. All right. Double bottom. Price comes down here, gives you a W formation, right? Low created. She retraces back up, comes down to that same low. So now people are viewing this as what? Support or resistance. Somebody talk to me. Support. People are viewed as a support. Next time price comes down to this specific area, they're looking for buys. Price comes down to that area, stops a little bit short of it. There's a buy. See what happens right afterwards. Boom, out of there. That is a crazy buy right there. That is an account flipping trade right there. You know what I mean? That is you turning your account from $100 to $200. Like, you know what I mean? Or whatever you're flipping. You feel what I'm saying? That right there is what you'll be looking for. Based on double tops and double bottoms. Okay. Support and resistance. Double tops and double bottoms have a lot to do with support and resistance. Okay. You have different type of patterns like what's called a head and shoulders pattern. Okay. This will be an ugly yet example of a head and shoulders pattern. Okay. Inverse. Okay. So a head and shoulders pattern is what's looked at as this. Okay. Price coming down, creating a low, okay, giving a small retracement up, then running that low, okay. So she comes down and creates a lower low than this one right here. She rejects all that, bounces back up, gives one more retracement down, and then buys. So an inverse head and shoulders pattern looks like this. When you see candlesticks start to give this type of formation. That is the formation for an inverse head and shoulders. This is what's called a candlestick pattern that people pay attention to. You see how price gives that to a certain extent right here. Low, retrace, pierce it, break back up, last retracement, gone. Okay, that is an inverse head and shoulders. A regular head and shoulders will look like that, but on the opposite side, creating a high, retracing, creating another high, breaking all the way back down, doing this, and then selling off. That's what a regular head and shoulders will look like. So if I can find something like that real quick, I'll put y'all on. Not the prettiest, but we got it. High created, placement down. I higher high created. See how this high is higher than this. Okay, so it all lines up with head and shoulders. Breaks right back down, gives that final retracement, selling. Okay, this is what's called a head and shoulders pattern. Okay, so these are different candlestick formations that people are looking at, different patterns that people pay attention to with how price forms to be able to come up with a determination on where price should go to next. Okay, you can see how y'all can study these formations by yourself too. You know what I'm saying? Like, I'm not going to spend too much time on them, but understand that if you see these like study these, go look up a head and shoulders pattern, go look up a double top or double bottom pattern, right? And then come on y'all charts and actually look for these formations. You feel what I'm saying? More often than not, if it's something that you really want to trade, you'll find this. You feel what I'm saying? You'll find this a lot. You feel what I'm saying? Different trades look similar. Let me see if I can find one real quick off the bat of an eye, without taking too much time. Good double top right here. Good double top. High, retrace. Let me get that. Sell off from right there. Good double top. Okay. Head and shoulders right here. Price creating a high. Tracing down right here. Coming all the way higher, creating that brand new high. Coming right the fuck back down. See that wick right there? See that rejection? That's your next high. Sell off. You know what I mean? These candles, these patterns happen a lot. It's on you to find them. Here we go, right here, head and shoulders. High, low, come up there, create a new high. Oop, come right back down. Give that small retracement. See these wicks right here? These are all retracements. Give that sell. You know what I mean? Double bottom right here. Low, boom. Give me that low again. There's your buy. Now I mean, so these patterns are all over the place. It's just on y'all to figure out which one you'll want to take advantage of and study it, find it, back test it. Because the more that you study it, the more that you'll see it. You feel what I'm saying? But if you don't study it, you'll never find it. Okay. It's all about getting your eye accustomed to seeing these patterns. Okay. Back to the PowerPoint. And there's a million of these chart patterns too. Like, there's so many of them. So once again, y'all can do y'all research on those if that's one of the specific ways you want to trade. Let's go. Okay, we're on the fundamental analysis. So before I keep it pushing the fundamental, technical analysis, drop a 1 in the chat if technical analysis makes sense. Doing all that to say, right, that technical analysis is all based on chart work. Okay. So if that makes sense, family, go ahead and give me a 1 before we keep pushing this fundamental. I'm actually going to stop this recording, right? And then start a new recording. This is OD long.